Hi guys, how is everyone? Today looking at our daily horizon view. Top 5 is ASX exchange traded funds. Our spotlight today is A200, that's the BetaShares Australia 200 ETF. As always, we're here to crack your financial sky, give you information, demystifying investments and ETFs if we can. That's our goal. So like, subscribe, that'd be greatly appreciated. Helps me with the algorithms and get me a few more subscribers and like, that'd be great. Top 5 percentage rises: MBB, QFN, OZF, QAG, GEAR. MBB is the VanEck Vectors Australia Property ETF. That tracks returns of the Market Vectors Australia ETF index, and that has 11 Australian property funds in that. So it was up a massive 6% today. So I think we're going to see a lot of movement today mainly because of the federal election yesterday. So that's going to be a huge factor in some of the things that we see. So we saw a rise of $1.55 on pretty good volume for ETF of 9,400 shares traded. Top 5 percentage falls: CNEW, CETF, UBP, RBTZ, Asia. So China New was down 3.61% or 23 cents on really very strong volume for this ETF of 36,600 shares traded. So everyone's getting out of China, and you'll see later on piling into Australia. So more confidence back in Australia. Top $5 rises. We saw SPY, A200, which is our spotlight. If you want to look at the spotlight, just click through to the end. MVB, VHY, and VAS. So for those of us who've forgotten, SPY is the State Street Spider S&P 500 ETF, and that tracks the S&P 500 index in the States. That's a smaller ETF, 31 million or thereabouts. A small dividend of 1.76%. We saw a rise today of $2.70, which equated to 0.66% on very, very low volume for that ETF of 576 shares traded. Top $5 falls. Today we saw IVV, CETF, IJR, BTS, and Tech. So for those who've forgotten, IVV is the iShares S&P 500 ETF. So that one tracks the S&P 500. That's one of the more popular S&P 500 ETF trackers on the market. We've got about $3 billion worth of market cap in that one. So this is one of the better ones. So you get a dividend yield of about 1.67%. Morningstar gives it a rating of gold. So we saw a fall of $2.04, which equated to 0.49% on a reasonable volume of 10,300 shares traded. So top 5 number of trades. Today we had VAS, STW, VGS, IVV, and VTS. So for those who have forgotten, VAS is the Vanguard Australia Share Index ETF, and that tracks the S&P ASX 300. There's about $3.4 billion invested in that one, so the market cap. We saw 281 trades today. Looks like net buyers. The price was up $1.40, and that equates to $1.37. So 1.73%, if I can get my words out correctly. Top 5 for volume: STW, IOZ, HACK, ETHI, USD. For those who have forgotten, STW is the State Street Spider S&P ASX 200 fund. So that one's designed to have low turnover, accurate index tracking, and with that you should get low costs. That one's pretty low cost. You've got a market cap of about 3.7 billion for that one. You get a nice dividend, 4.36%. Morningstar gives that ETF a rating of bronze. So we saw 1.1 million shares traded today, which is pretty solid volume for that. That's probably, very good volume. We saw, net buyers, share prices up $1.05, which equates to 1.67 cents. Top 5 for value: STW again, no surprises here, BAS, IOZ, IVV, and A200. So STW, we saw a very strong value here because it was top number of trades, top volume as well. So $65.7 million worth of shares traded today, which is quite impressive. That's kind of on the top end of trading, but like I say, today was quite different. After the federal election, I'd say people have more confidence, so you know what's happening for the next 3 years. So people are confident that the Australian market's going to perform well, so they're firing back into ETFs and Australian-focused stocks. So our spotlight today is the ASX A200, which is the BetaShares Australia 200 ETF. This one tracks the performance of the index, provides exposure to 200 of the largest listed companies on the ASX based on their market capitalisation. Quick overview, kind of gone over that already. So you'll get a core allocation of Australian equities, so top end of town. So you can, possibly give you tactical exposure to the Australian market as well. It's a very low cost alternative to other active and passive managers. As mentioned, it's low cost, probably one of the lowest costs in Australia, and gives you instant portfolio diversification. One purchase, you get 200 of the top companies in the ASX. So we're looking at a net asset value of 107.07. We have a close today of 108.93. As mentioned before, the management cost for this one is 0.07%, which is very low. I have a quarterly distribution: January, April, July, and October. I've had to calculate the dividend yield because this is such a new ETF, so don't quote me on that. So we're looking at roughly 2.67%, but that obviously can change due to the share price movement and also just the way that they calculate that. So be careful with that one. The Australian share market has performed well over the long term, especially when dividends are included. And I think that, going forward, that it still should perform reasonably well. I think the main positive about this ETF and what sort of jumps out, when you look at it in comparison with other ETFs, it's just the rock bottom management fee. So as mentioned, 0.07% per annum. These days, we want to be making sure that we're only really investing in products that have a low management fee, because the high management fees will actually obviously eat into your returns and reduce your returns over the long term. So this ETF could be appropriate for investors seeking exposure to a diversified portfolio of the largest companies on the ASX. I really like this one. I own this one in a small way. I think it's definitely one to keep an eye on, mainly due to, as mentioned before, the low management costs. Also have a look at STW, IOZ, ZYAU. As always, you need to do your research. Have a quick look here. So performance, as I was saying, that this is quite a new ETF. So inception date was the 7th of May 2018. Since inception, you're looking at a 8.48% return, which isn't too bad. Done pretty well in the last sort of 6 to 3 months. Picked up quite a bit of that return for you. So you're looking at Commonwealth Bank, BHP, CSL, Westpac, ANZ, National Australia Bank, Woolworths, Telstra, Wesfarmers, Macquarie Group, all in the top 10. So all those usual suspects. So as always, we're not promoting any particular ETF or product, purely information here. So you need to take your own financial situation into account and get additional information and complete further research as and where required before we make any purchases. As mentioned before, we're here to give you financial just information, I suppose, trying to demystify the whole world, make it not as scary as it appears at times. So we're here to crack your financial sky, make you guys a bit more confident if we can. So give us a thumbs up, subscribe, and make sure to hit the bell because you want to know when the new videos come through. Sometimes I try to get them out at the end of every day, but sometimes it just doesn't happen depending on what else I'm doing at the time. Thanks guys, leave a comment, yes, give us a like, greatly appreciated. Catch you tomorrow. Ciao.